All right, everybody, welcome to Talkin Investing. We have a huge week. You're here with Tom and George. We had massive earnings this week from pretty much most of the Mag 7 between last week and this week. We had records were set in both directions. We had one of the most epic collapses in history. We had one of the worst days ever, followed by one of the best days ever. I'm going to try and explain exactly why I think all of that happened and where we go from here. So we got a boatload to talk about. Oh, by the way, the Fed happened to meet. So we got to talk about what they did, what they said, what everybody thinks about it. And I'm going to tell you what I think about it. And I think they were very clear. I think the market still isn't quite getting it yet. So we'll see what you guys think. So big stream coming up. Smash the like button if you are new here, or if you just got here, or if you're interested to hear what we have to say. George, what's up?
Not the stock market, that's for sure, Tom. Stocks were volatile this week as investors digest the Federal Reserve meeting. Big tech earnings, inflation data, and I was wrong again. We're never going to see a rate cut. Never, ever, ever.
It was a bold
AI,
prediction.
Crypto, and can we say sports and NFL? Or no, we can't talk about that.
Yes, we can.
Okay, and the economy and is the Federal Reserve for the American people or not? That's the good question. So that's all I got, Tom. Because I'm pissed. I heard somebody lost $24 billion this week, so I'm pissed.
It was a rough week for some. Inside, we're going to look, because inside of what was not that great of a week, we had one of the most historically green days of all time. So this was truly the best of times and the worst of times this week. But I think it's in the rearview mirror. So we're going to get to that. We're going to explain why. And so I'm just going to give you a spoiler alert. I am still bullish right now on crypto. I'm bullish on Bitcoin. And we're going to get more nuanced than that.
You can't be bullish on crypto right now.
I'm going to explain why I am. I got a couple of plays that I have just a very high level of conviction. And I will say, as I go on, a continuing theme is going to be, I don't know what's going to happen tomorrow. I don't know what's going to happen next week. I am playing the next 6 months, the next 12 months, the next 18 months, and I remain at a very high level of conviction on certain things, and I think we have a lot of evidence that things are moving in that direction. So everything's not good. Everybody's not going to win. I'm also a realist. I understand, we got to do our due diligence, and we gotta. I see somebody asking, Tom, did you sell your Mara? Well, sometimes we got to make hard picks, and we got to make decisions. I'm going to answer that right now and talk more about it later. I did not sell my Mara this week. It's under deep consideration right now. So we will talk about that and see what you guys think about that. And I'll tell you a little bit, when it gets this crazy, I kind of try to just watch, because and we had 2 days in a row that were opposites. We had one of the worst days I've ever had in my portfolio, followed by the best day I've ever had in my portfolio. So, that's when those things start to happen, followed by today, which was another garbage day. So you net it all out, and did anything really happen at all? It sure felt like it along the way. So there's the volatility. If we've said it once, we've said it thousands of times. This space is volatile. And if you can't handle volatility, I saved a lot of what went on this week. I'm going to walk you through day by day, and I'm going to tell you why most retail investors lost all their money this week. That's just what happened. And that's what they wanted to happen. They set everybody up. And
South Korea?
We're going to talk about the South Korean market for sure.
You know what's funny is I love reading your comments, guys, because it really makes me laugh. But if you're still in this market, you're a goat, by the way.
That's right. If you've managed to get from here to there, I see somebody saying
What a week.
IREN to zero.
IREN to zero.
This week was IREN's my highest conviction stock. So agree to disagree, but everybody's got their own opinion. Yeah, to George's point, I mean, if you made it through all 5 days of this week were just insane. Absolute insane. Any one of those days should be considered like a one-off, once in a blue moon type of a day, but we just kept getting them one day after the next, and there was a reason, and I see some of you mentioning it in the comments, and it had a lot to do with, we're going to go through what happened to a fund called Situational Awareness, and if I could be corny enough to just lead with the fund situational awareness did not appear to have enough situational awareness because they basically had to liquidate everything. And I'm going to tell you why that directly, not only did it directly affect our stocks, but it was it's the setup that made this whole week happen. So it was a fairly big deal, especially having to go through that, one day at a time. This is brutal. This is brutal. We like to talk about that on this channel, that, listen, this is an emotional roller coaster. It's very difficult to get through. This is why we meet, and have these live streams. And, we meet with the members every Tuesday night. And Tuesday was a tough one. And Wednesday was dramatically worse. And then Thursday was one of the best days I've ever seen. And now Friday, if you look at the board that's on the screen right now, it's all red. With the exception of Nebius or Nibius, depending on who you ask. They were up 1% today. So that was the big winner on the day. But this was not a dramatic down day, other than Riot was down almost 9%. When you see Wednesday and Thursday, you will see what I'm talking about. And you guys lived it, so, mostly you know what I'm talking about. Wednesday was the Fed. Wednesday was going along like just another day. The Fed put out their FOMC statement. Nothing. Next half hour, there's a half hour between the statement and the press conference. No real movement. Very small. The press conference started. Maybe for the first 20 minutes, no movement at all. And then, out of the clear blue, as if somebody got the memo, apparently everybody got the memo but me, every stock that I own anyway simultaneously tanked the rest of the day. And the rest of that day was a nightmare. And if you thought that day was bad, the next day reversed all of it and then some. So this was a bizarre roller coaster, right? What's changed from 4 p.m. one day to 10 a.m. the next morning that causes, one is an epic level sell-off and one is a historic recovery? So the answer is nothing except manipulation. And we're going to talk about who, what, where, and why.
I think if one thing this week has taught us is that you have to have an exit strategy. And I bet you situational awareness wishes he would have had an exit strategy.
I'm going to break down his trade because we called this when his filing came out way back when. And I went through that, and the market, I'm not going to use the word lied. The market, I'll give them the benefit of the doubt. Let's say somehow they grossly misinterpreted what he did. So I tried to clarify that as best I could. That's how it played out, and we'll get into the details. There's a lot of narratives that happened in a 90-day window, and they were all false. They were all false, and this is happening more and more and more in the market. And so you got to be able to see through the haze, and still with all of that, you're going to have to deal with the volatility and either decide you can live with it or you can't live with it and buy the SPY or, whatever, you put your money under your mattress. I don't know what the answer is, but this is the new norm. For those of you waiting for the stock market to return to normal, this is the new norm. So get used to it.
And the other thing is, this is why you can't borrow somebody else's conviction.
That's it. That's another one of our very common sayings here. For those of you who are new here, you have to do your own due diligence and create your own conviction internally if you're going to withstand a day like Wednesday. The sell-off was massive on Wednesday, and that's after Monday and Tuesday were a nightmare. So one of the things that I thought was, okay, you know what? Big sell-off on Monday, big sell-off on Tuesday, FOMC meeting on Wednesday, the fix is in, we're going up on Wednesday. Well, guess what? It just got worse. Even bigger sell-off on Wednesday. I saved a screenshot of the chart week to date through the end of the day Wednesday, and it's staggering. So we'll look at that as well.
Would that be considered a bull flag or a bear flag?
Well, this is a 15-minute time frame. So, I mean, this is more of a bear flag if you wanted to call it anything. But on the 15-minute time frame, those are super, super small indicators for very small short terms. We'll look at the 1 day, and we're going to look at the 1 week. And that's why some of the reasons I remain optimistic on Bitcoin. So, and optimistic doesn't mean I think, it's going to 100,000 next week. I understand. I don't know if this is going to take a month, 3 months. Everybody seems to have October and November circled on their calendar for when this thing turns around. So we'll see. Is everybody right? I guess, that could happen, but it's not typical. That's not how big money makes money in the stock market, for all the retail investors to be exactly right about their thesis. So you can't just be a contrarian for the sake of being a contrarian, but you got to do your own due diligence. And if you'd be so kind, you can smash the like button for us. I think they're hiding our stream, George. We need help. We need likes.
Yeah.
Well, do you know how many likes we have?
They're hiding it. We only have 23.
23 likes. We're shooting for 150 likes. I hate to plead, but help us. Like the stream. All right, let's start getting
this will probably get used to this, because these are going to be the smallest streams we ever have. Because what Tom and I are kicking off KUDAB in the next week or two, definitely before the season starts in the NFL, and we're going to be talking a lot about the predictive market, because we think that's more entertaining than talking about stocks.
So more information on that to follow. George is kind of dropping a little Easter egg here. He's put an enormous amount of time into a project. We're looking to launch, we hope, next week. So, obviously, those that follow the channel, those that are members will find out first. Those that subscribe to the channel and catch us on our live stream will tell you all about it. We're very excited, but we're going to be ready when we're ready. So these things are.
And then the other thing is, we've never told you the goals of this channel. One of the things, and this is why we meet, and this is why we care so much about our community, is because we want everybody to become financially independent. And the only way you do that is over time. You can't, I mean, for us at least, I'm sure everybody gets lucky every once in a while when they walk into the house, and then they make the right bet and they think everything's perfect. And then they realize that, time is the great equalizer.
Yeah, we had somebody very famously find that out this week, which we're going to talk about in detail. And these are life lessons. And this person, was very young, and Most people learn this life lesson with $1,000 or $10,000 or and he learned it with
or $500,000,
tens of billions of dollars. Unfortunately for him, but fortunately he's 24 and he's got time to come back, and we'll see.
And this is I was just thinking about this time. I can't remember the name of this company. The last name was Angel. And they took them out, I think like last year or the year before. I think it was the year before that. Do you remember who I'm talking about?
I don't. That does not ring a bell.
It was like a $5.5 billion, and he wasn't wrong on any of his picks. He went long and they shorted him and they killed him. And it's just it was the wrong time. And every single one of his stocks after they did this went up. So that's a good indicator that we're at a bottom.
Right. And a lot of people are talking about this was a very good washout. And I see Doug saying it wasn't a bad week for Citadel, them crooks. So that's Doug saying that. We're going to talk about what Citadel did and why I think this was, you guys can all use your own judgment, but when I walk you through what happened, sometimes 1 + 1 = 2. That's, I guess, what I would say. So, and here's the thing. Here's why I'm talking about it. Not because it's gossip or because it's a fun story. It affected every single one of our stocks. This hedge fund that got taken out, some of their biggest positions among their top 10 was IREN, CoreWeave, Core Scientific, CleanSpark. They also held Keel, Riot. They held the stack here. That hedge fund had just basically moved everything into our space. Now, we were here first, but what we did not know is the market was going to have an incentive to what's a synonym for manipulate? To do something that is just like manipulating. And they did. And we had to grin and bear it. But I think we're on the other side of it.
And also, this is the end of the month. That's also a good sign to showing that it could be at the bottom.
Yeah, let's hope everybody's done what they're going to do and that August is better than July, because July was not good. So it was actually okay for Bitcoin. And we will look at we're going to look at the week to date, month to date, year to date charts later in the stream. And we'll see, it wasn't the month was awful. The week was weird. The year's going okay. But the manipulation and the volatility is epic. We haven't had a day like yesterday. I got to go back to the peak of the bull market in 2021 is the last time I saw across the board moves like I saw yesterday. I would say that was the biggest up day now, not for the overall indexes, but for each one of my watch lists and for the stocks that I own that we talk about all the time on here. And I'll show you them. I saved all the screenshots, so I'll show you. And it's crazy. So don't count on a lot of those happening. And for every good one, sometimes there's a bad one. Aschenbrenner today is yesterday's Sam Bankman-Fried. Well, interestingly,
yeah,
he's from.
Yeah, he works. Yeah, we just found out that he worked for Sam Bankman-Fried.
Yes,
isn't that crazy? I couldn't believe that.
That just so I feel like that just so happens to be the case. I don't think this kid had bad intentions, and he was minting money. But Wall Street saw an opportunity to punish him, and they will not pass on an opportunity to punish me, you.
They want your money.
They want your money. That's right. They don't care who's on the other side of the trade. Yeah, they want the money, all of it.
Yep.
So, it's one of those things when somebody says, well, it's nothing personal. It's like, well, it is exactly personal, but it is what it is.
I won't say what I wanted to say.
What?
It's a political statement.
Oh, hold on. Trigger warning. Trigger warning.
By the way, so I put a poll up. Is AI at the top and going down the stocks like IREN, CleanSpark, Wolf, CIFR, Riot, all those guys? 14% say yes. 86 say no.
So that is good. So I'm not the only one who's a little optimistic right now. I am still going to say we're early in this process, and I have more charts and graphs today than I've ever brought to a live stream. So hopefully we'll actually get to all of them and
do it
and see what's going on, because this week was a thing. I was hoping to wait for some people to get here, but George, nobody's hitting. Is anybody? How many likes we got?
38. We're at
38
this
likes.
Is crazy. Maybe everybody's jumping off bridges and 57th floors.
I don't know. This is one of the most exciting weeks to talk about ever. So I guess if you missed it, then you missed it. But we're going to talk about it. I'm not waiting for anybody else. I see a bunch of our members here and a bunch of people that I know have been subscribers for a long time. So let's talk about what's going on. I got to start with the Fed because that's how the world works. So let me get to... So Kevin Warsh spoke yesterday. This was his second time running the Fed meeting. I'm sure you guys have heard about this at great length. I think I'm not sure what people were listening to, and I can tell you, nothing short of scolded several of the journalists that were asking him questions, because quite honestly, they were dumb questions. Given what he's already said, given what they already know, just don't ask a stupid question. Do your personal self a favor. Don't embarrass yourself and ask a dumb question. But I don't know. I guess that's what these people get paid to do for a living. One person asked, I'll give you an example. It was might have been the last question. It might have been all he could take in him, but he could have done a walk-off on this one. They asked, you said that you weren't going to do press conferences unless you had news to report in the press conference. So why are you having a press conference today? That was this guy's question. And so Kevin's answer was, well, I guess for you, the news is that we're having a press conference today, but it's been on the calendar all year. So it's not really news to anybody else. I made a commitment. I'm going to follow the calendar that's already out, do the press conferences for the rest of the year, and then starting after we get through with our committees, after we go through our results, starting next year, I'll do press conferences when appropriate. It's just a ridiculous question. And all the rest of the questions were on par with that. And the thing is, it tells me the people in the room are not listening to him. They're still not listening to him. He's not making a mystery out of this, but people have their own confirmation bias, and they want to hear what they want to hear, and they're not listening. Just life rule. Listen. Right? Talk when you got to talk, but I've never learned anything from talking. Everything I've ever learned was from reading or listening. So, and you gotta take what you hear. So, Sarmelon Gaming said, no hike, no cut. So that's the bottom line. No hike, no cut. I'm going to go through this. The Federal Open Market Committee approved the following statement for release by a 9-3 votes. There were 3 dissenting votes. I'm going to get into some FUD that they're putting out about that, as if somehow that's never happened before, and that's just simply not true. We do know that we're at a contentious moment. There is a new Fed chair. He has a different opinion on what the role of the Federal Reserve is. My guess is that for those of you who have paid attention and listened to what his opinion is, my guess is you will like it a lot more than all of the previous Fed chairs. Basically, his position is the Fed needs to get the hell out of the way whenever humanly possible. We are not in charge of the economy. We are not the all-knowing, all-seeing prophet that should dictate everything that happens in monetary policy and otherwise. We're going to watch, and we're going to try to learn, and we're going to adjust when appropriate. I'm guessing most people would prefer that policy if they sat down and thought about it. We will do a poll and see what people think. Now, there's also going to be bias because I know, well, got to give another trigger warning. This person was elected. This person was appointed by Donald Trump. So by association, some of you are going to absolutely hate Kevin Warsh no matter what he says. I don't do that. I've never done that. I don't care who the president is. The people who are in charge are going to make policy. And if you like them, if you hate them, all of that is totally irrelevant. If you're making investing decisions on that, then I guess you should just have a nice chat with your money and have a nice goodbye, farewell speech, because it's going to be gone. You got to deal with the administration you have. You got to deal with the situation on the ground, as they call it, not what you wish it was. And Ethan's saying, Tom, it's 72% for a hike at the next meeting on the CME, and there's going to be, right? I'm not from the future. I'm just here to tell you there's going to be no rate hike at the next meeting. I don't know what and in what other way Kevin Walsh can tell people that it is going to take radical circumstances. And when you look at what's going on, it's the opposite. Everything that's happening right now is exactly congruent with when the Fed cuts rates, not raises them. So
thank you.
You are being fed a bill of goods. You are being manipulated. I told everybody with, short of certainty, because again, I can't predict the future and anything is possible until it happens. But I pounded the table. There's absolutely no chance on earth that they're raising rates at this meeting. It was not even a possibility. And I'm going to tell you the same thing. Unless we get some seismic information between now and the September meeting.
All right, welcome to Talkin Investing.
Some type of inflation jump to 7%. We got a CPI at 7%, or some kind of World War III broke out, or God forbid, or something. Given business as usual, it's not happening. He's told us it's not happening. People aren't listening.
How about this one? A 0.25 increase on $37 trillion is $100 billion a year.
Right. There you go.
So I understand inflation and all that, but I can't understand why you wouldn't want to save $100 billion. What's the strength of the dollar right now, Tom?
It's strong. The dollar's strong, and there's two different ways to measure that. The DXY is very strong right now. Now, against real dollars compared to, historically buying a loaf of bread, we all know. Listen, we experienced hyperinflation in 2022. That's what happened. It got over 9%, and those are the funny numbers that they give us. So imagine what it really was. So that happened. That becomes the new baseline. Everything that happens after that is compounded on top of that. We can't stop that unless we want to go into a multi-year deflationary period, and there's another name for that, and that's called a depression. So we're between a rock and a hard place right now. One of the things that we can do is lower interest rates. And I'm going to go through why raising interest rates not only makes no sense, it would actually be, I would consider it an act of stupidity. So I know that sounds harsh, but I'll walk you through it. I'll walk you through it right now. I won't just leave that hanging out there. And I want to get to Frederick, who's been a member for 18 months. Did not earnings mostly show AI CapEx was equal to or greater than profits? What the entire AI FUD was all about? Trump must, in any way, if he can, relax macro soon. So I'm going to go in detail. Thank you for that comment, Frederick. I spent a lot of time and put together some very detailed numbers on CapEx, on profitability, on cash flow, on what's going on here and what's going to keep going on. So that's the reality we need to live in. So you're bringing up one of two reasons. Here's why the Fed raises rates in an inflationary period. And this is going to be review for most of you, but I'm just going to take 3 minutes and start at the beginning. The Fed raises rates in an effort to combat inflation, to cool down the economy. That typically the job market's running hot. People have extra cash. Spending's going up. Inflation's occurring. Right now, there's two main drivers. First of all, the inflation read came in great. It's the jobs number that came in poorly. So when the jobs number's bad and the inflation number's good, that's when you lower interest rates. Just look at all of history. That's not my rule. That's how history has acted. Now, new guy's going to act a little different. I understand that. We'll get to that. Okay, what are the two drivers that are potential inflation influences right now? There's two things. They're as plain as day. Drop in the chat if you can, or I'm just going to tell you right now, and you'll let me know if you think these aren't them. Number one, oil. We have a little situation going on, and that is artificially raising the price of oil for an indeterminate period of time. So nobody likes the situation. I don't like the situation. I don't want to spend a lot of time talking about it. I'm talking obviously about the situation in the Strait, the situation in the Gulf, and that's just directly affecting oil, the supply of oil, the perception of the supply of oil, oil reserves. So there's inflationary pressure due to oil. Now, if the Fed raises interest rates a quarter point, 25 basis points, 100 basis points, 300 basis points, is that going to change what's happening in Iran right now in any way, shape, or form? Is that policy change going to affect the flow of oil out of the Strait of Hormuz? These are the easy questions. That's a no. Right? So the argument, that's one of the two things that's affecting short-term inflation, which, by the way, again, is not spiraling out of control. All the numbers went down this month. Maybe they'll tick up a little bit next month, but they've been very steady. Number two, Frederick just talked about it. We have historic, unprecedented levels of capital expenditures in the stock market. Numbers that dwarf anything that's ever happened in the past. I'm talking 5, 6, 7 times the previous all-time records. So If the Fed raises rates 25 basis points, is Google going to go, you know what? I'm out of the AI race. I'm out. I'm going to secede and let the other players win because rates are up 25 basis points. So I'm not going to spend $200 billion this year. We can do a poll. Is there even one person that thinks that's going to happen? I don't. And I'm going to explain that in more detail later. They're not even really borrowing the vast majority of that money. So the interest rate is irrelevant to them. They couldn't care less what the interest rate was. They are in a seismic industrial revolution level shift in how the economy works. They're not going to get left behind as multi-trillion-dollar companies because the Fed raised the rates 25 basis points. So all that money, and it's trillions of dollars, that's all getting spent. So what does that leave? If they raise rates by 25 basis points, who does it actually affect? It will affect some people. It'll affect you. It'll affect me. It'll affect everybody who's not a multi-millionaire or billionaire. That's it. Everything else is going to go on. Kate, what? I see he said, call on me, Tom. My arm is getting tired.
I thought that was funny. That's the funniest comment.
Let me know what you're thinking, and I'll talk about it, or you can add to the conversation.
Robert, they're supposed to name who it was. I thought within 14 days. CleanSpark?
I will tell you, technically, they have no obligation to ever name that company. If that company has a non-disclosure agreement with them for various reasons, I can tell you the simplest, easiest one would be if it's Meta, and I'm not saying it is, they would sign a non-disclosure agreement because Meta can't at the same time say, we have excess capacity and we're going to sell it and be renting capacity from others. So, and that's just one example. I'm not saying that's what happened.
But they could actually sell their, service on CleanSpark. And nobody would ever be the wiser.
Right. If they're selling, they could build their stack out because CleanSpark is just a landlord.
Right.
So they could build their stack out and sell the compute over there. Oh, he was just kidding. All right. Well, you were a squirrel, Katie. You effectively completely got me off what I was saying. So I think I see what you were saying now. These two, you wanted to answer because the answers are super obvious. We can't do anything about oil. We can't do anything about CapEx. They're happening. That's where pricing pressure is coming from right now. So raising interest rates would be an act of futility. The very little that it would do is just hurt the regular consumer while not changing the behavior of any of the big money at all in any way. So it wasn't going to happen. It didn't happen last meeting. It's not going to happen next meeting. And again, listen, I'm just some guy that talks on the internet. So this is not financial advice. You can take all this with a grain of salt. I'm just telling you from my perspective, I would assess a less than 1% chance that they will raise rates at the next meeting, allowing that to be above zero in that something totally unknown, some third thing could happen that hasn't happened yet that would change the situation. But as it stands right now, it would just be an act of stupidity. And Kevin Warsh has been fairly adamant he's not doing that. So everybody says we're getting no information from the Fed. They're not telling us anything anymore. One of the people actually asked the question. Like, you're not. What do you do? What are you even here for today? And I'm not talking about the other question I just talked about. She said, what are you even here for today if you refuse to tell us anything? It's like, he's not telling you nothing. You're just not listening. You want dot plots. You want specifics. Let me read here's what he's telling you. The committee decided to maintain the target rate for the Fed's fund in support of Federal Reserve dual mandate. The committee is continuing its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace despite elevated uncertainty that's owed in part to the conflict in the Middle East. So there it is. He's telling you, listen, there is elevated uncertainty. Oil is up. It's because of the conflict in the middle of the East. I'm Kevin. I can't do anything about that. My policy doesn't affect that. It's outside of the parameters of that which I have any control over whatsoever. Productivity growth and capital investment are strong. Capital investment is strong. What does that mean? That means CapEx from the hyperscalers, right? This is not tough. This is not a mystery. This is not something shrouded. This is not an Easter egg hunt. He told you right here. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. Well, we know that. That's been true for the last 5.5 years. And one person did say, you said anything other than 2% inflation is unacceptable. Why isn't inflation at 2%? Again, please, who thinks that's an intelligent question? Drop in the chat if you think that's an intelligent question. He said inflation's been elevated for 65 months. I've been here 6 weeks. I don't have a magic wand to use those words. I can't fix this in 6 weeks. That's ridiculous. So, yes, what he's clearly communicating is he wants to get to 2% inflation. And what he's also clearly communicated is the Fed has a lot of other tools in the bag than just going straight to raising interest rates, particularly when, by any common sense measure, the economy is telling you to lower interest rates. I would be paying attention. The questions that I would be asking if I were in the room that these people should be asking is, what are you going to do with monetary policy? What are you going to do with the balance sheet? Because this is how he wants to get. He has explicitly said, all of my predecessors think that this is a binary situation. Either you have to deal with jobs or you have to deal with inflation. I don't believe that's true. That doesn't make any sense to me. I think we can deal with both at the same time. Have a healthy economy from a job standpoint and keep inflation at check and get it down to 2%. I can tell you right now, he's going to shrink the balance sheet. And the reason I know that is because he's said it. So I don't have to try to figure it out or read between the lines. So everybody wants him. Right, we came into this. There was still 30-something% chance of a rate hike the day of the meeting. That's not how this used to work. People want to be 99.9% certain on that day. Well, they should have been, is my first thing. But if the futures are going to build that in, if the press is going to tell you that we should be raising interest rates and that there's a good chance of that or some chance of that, then that's going to be the narrative. And then what happens is everybody, all of us, we listen to that and we hear it on one station and then the next station, and then we check the Fed watch tool and it says, yep, that's what's going to happen. And then we go, I guess, the Fed's going to raise interest rates. No, that's not how this works. And he said, one person asked him, what if the Fed Watch tool, she brought up the Fed Watch tool. What if the Fed Watch tool gets to 100% chance of you raising interest rates? Don't you have to raise interest rates in that scenario? To which he answered, no. We will use that as a data point in association with all the other data points and do what is best to achieve our dual mandate. So just because the market throws a temper tantrum, just because the market builds in 100% chance of them raising rates, don't expect it to happen. He straight up addressed the Fed Watch tool in the Q&A and said he doesn't care. No, that's not fair. He said it doesn't dictate what he does. He will watch that. And furthermore, he went on to explain, this is why I don't tell you guys what I'm doing. I want to see how the market reacts. I want to see how the 10 years, the 20 years react. I want to see how the Fed Watch tool reacts. If I keep my mouth shut, I get a lot more information. If I tell you what I'm going to do, then all those things that I just mentioned, they're just going to build in what I say. So it's a feedback loop. I'm just going to get bounced back at me what I put out. So I can't. He's basically saying, listen, this is a controlled environment. If I jump in the middle of it and tell everybody what the answer is, this is no longer a controlled environment. Your sample group is now destroyed, and he's not going to live in that world. So I'll leave it at that unless anybody has any other questions on that. But this was, in my mind, the no-brainer outcome. I've been quite clear about that on every stream. And I'll start right now. We got 2 months till the next one. Unless something dramatically changes, they're not raising rates at the next meeting. He's not going to raise rates unless it's an absolute necessity. Might we get another 9-3? An 8-4? Who knows? He doesn't care. He started his first meeting by saying, I like a good family fight. We're going to duke it out and figure out what's best for this country. I don't mind if it's a 9-3 vote. This doesn't have to be 12-0 every time. Let's get everybody's opinion. Let's get all the information we can get and make the best decision we can make. Now, listen, I'm no fan of Kevin Warsh. I don't really know him at all. He's done 2 meetings. He's new. He may succeed at what he's doing. He may fail miserably at what he's doing. But I know this. He told us what he's going to do. So until he does something different than that, I'm going to assume the thing he said he was going to do, that's what he's going to do. And Doug is saying September 15th, 25 cut. Inflation's been cooling. Right. I would say a 25 basis point cut in September is a possibility. And it's certainly, to my mind, a much higher possibility than a raise. Because while I can't find a good reason to raise interest rates, I have a laundry list of reasons why we desperately need to cut interest rates. So those are my thoughts. George?
$100 million. That's all I can say.
I mean, you were feeling like you were hoping they were going to cut them this time. You think they're going to raise interest rates at the next meeting?
Hoping isn't the right word, Tom. I live in reality. It's just I don't believe that the Federal Reserve really has our best interest. But here's what's interesting. And somebody said it, and I forgot who it was on the site here. The Treasury's going up, and so are, no one said this, but the mortgage rates have been creeping up too, which is really interesting to me.
And he mentioned all that, and that he's watching that, and he's allowing the market to do its thing instead of him telling the market what to do. And I can tell you,
but I don't know why. But I don't know why the mortgage rates would be going up. It seems like the level is low, that there's not a lot of people out getting mortgages right now.
The mortgage rates are going up because, and this isn't the only reason, but in my opinion, right now, the narrative is inflation's out of control, which is not true. It's just, I'm going to show you the inflation numbers. I'm not going to show you. I will show you right now. Here. This is PCE. This came out what? Yesterday? The U.S. PCE price index increased 3.7% year on year, easing from 4.1% in May. This, by the way, is the quote-unquote preferred measure for the Fed. Now, Kevin Warsh has already said, we're going to take a look at how we do all this. So I wouldn't say anything's the preferred data point at this point. But historically, this has been the one. Well, it went down a bunch. More importantly than that, the consensus was that it was going to come in at 3.7, and it came in at 3.7. So no surprises to the upside. PCE's going down. CPI was, I think, beat big time this month. So CPI was a phenomenal read, while the jobs numbers were, a little bit of a nightmare. They came in way under what we expected, and all the previous months got revised downward. Whereas the CPI and the PCE inflation data came in as expected or better than expected. That is not the formula for raising rates. It's never happened before. So the expectation that it was going to happen was unreasonable. And as long as you see this type of stuff, and they're not looking. A lot of times the Fed wants to raise rates and they're looking for cover. So they'll take any number they can get, but they're not even getting any to take cover with. These numbers are the opposite. So this is reality. These aren't my numbers. They're the numbers. Take them for what they're worth. Take them with a grain of salt. I tend to, I do not necessarily trust, particularly the jobs number. I have very little faith in, because they adjust it 3 or 4 times by the time they're done. And oftentimes they're extremely significant adjustments. Just recently, they did an adjustment that made a month go from positive to negative. I mean, that's just a fundamental change. So this is what's going on with the PCE. This came out after the Fed meeting. So if the Fed was looking for bad news to maybe find an excuse to raise rates at the next meeting, they didn't get it on this report. They got the opposite. All right. What's next? Next, if you would be so
Hit
kind.
the like button.
You got it, George. This interruption is brought to you by the smash the like button. And also
66.
feel free to subscribe to the channel as well. It's free, of course, so we appreciate it. And we try to do our best and get some good information out here. So let me keep going, because we've talked about inflation. It is what it is. Let's talk about what happened this week, because this one was a doozy.
It's a doozy.
It's a doozy. Okay. I'm just going to walk you through this a little bit, because it's worth looking at. Let's go back in time 2 days. This was Wednesday. This was the day of the Fed meeting. The vast majority of this price action happened in the last hour and a half of the market. Things were going not great, but okay. And then Like, it's like somebody tied cement to the feet of all these stocks and they sunk like rocks. Virtually all double-digit moves to the downside. This is, when we talk about volatility, this is volatility, right? This is why we always say that. I know people might be sick of hearing it. There's a reason we say do your own due diligence. There's a reason we say, we warn people this segment of the market is highly volatile. What do we mean by highly volatile? We mean almost every single stock on my watch list was down double digits in one day. Marathon down 11.5%. Riot down 14%. Cleanspark 11%. IREN 13.5%. CIFR 13%. Keel, formerly Bitfarms, down 15%. HUT 13%. BitDR 13%. Hive almost 11%. Core Scientific 12.5%. The big winner on the day, the only stock that didn't round up to double digits, ABTC, down 5%. But wait till you see what they're down on the week, the month, and the year, and you won't feel quite as good about that. They're only down 5% because there's almost no room left to the downside for them to go. They're down about 98% from their highs. CoreWeave down 9.6%. Nebius down 12.5%. Applied Digital down almost 13%. This was Wednesday. This was really the last hour and a half of the trading day on Wednesday. So because this happened so rapidly, I did very little. I think I might have some of these other numbers. So let me just blow these up. These were the chip stocks on Wednesday. Chip and AI related. These aren't all direct chip, but Micron down 10%. AMD down 5.5%. SK Hynix, ironically, the one who, quote, missed earnings, was the better performer, down 2.6%. DRAM, which is a ETF of all of these kind of combined, down 6%. SanDisk down 7%. A lot of the supply chain names down 6%, 10%, 2%. Applied Materials 8%, ARM 8%. So this was a wipeout. So the one thing I did do was I bought some AMD, I bought some Micron, and I bought, to a lesser extent, some AMD. So, and some DRAM, which is a basket of all of them. So I bought, the only thing I pulled the trigger on, and I wanted to buy everything, because you can see the last list we just looked at, right? But these stocks that I own by and large, down double digits across the board. Here's my other big positions, right? Micron down 9.9%. That's a decent position. DRAM is really the bigger position that I've built out by far, down 6%. So everything was down. I mean, it was just, unless you were a software stock and then you were having a good day. So fortunately, I diversified over the last 120 days because the software stocks, and I've been talking about it on the channel, especially with the members, so you guys know exactly which stocks that I bought, and they had phenomenal days, which was the only counterweight that, you know, kept me from wanting to jump off a bridge over some of these days. That was Wednesday. Let's go to Thursday. Oh, first, here. So here's a screenshot of my chart. So this was the week to date. So that's Monday, Tuesday, Wednesday. So as of the end of the day on Wednesday, not only was Wednesday a bad day, but the whole week had been a bad. Bitcoin was only down 1%. You got Keel, formerly Bitfarms, down 25%. CIFR down 24%. BitDR down 23%. Nebius 21%, IREN 21%, Core Scientific 20%, HUT 20%, Riot 19%, Wolf 18%, Cleanspark 17%, Mara 17%. You get the point. By Wednesday at the end of the day, anybody trading these stocks was not feeling good about the week. Monday and Tuesday were bad, and Wednesday got much worse. Things were heading in the wrong direction in a hurry. So, just when all hope is lost, we go to Thursday. Look at this. I just want to take a minute in a week where we had a lot of red. We had a lot of FUD. Thursday was a thing of beauty. Every single stock up double digits. Most of them up 20% or more. IREN was up 30%. 30% in one day. This is a larger than $10 billion market cap stock. That's what the stock market's doing, and I'm going to get to that next because it's not just these stocks. We broke 2 records in the last 2 days in the history of the stock market. Marathon up almost 18%. Riot up over 20%. Cleanspark up over 20%. IREN up over 30%. CIFR up 28%. Keel 27%. HUT 22%. BitDR about 25%. Hive 18%. Core Scientific 20%. ABTC 13%. Was that the loser on the day? So, okay. Still up almost 14%. CoreWeave 21.5%. Nebius 27%. Applied Digital 20.5%. This is a legendary day. This is one of the best days I've ever seen for this group of stocks. And that includes when most of these were Bitcoin miners back in September, October of 2021, when the market was in euphoria. We peaked somewhere around November 9th, 2021, when Bitcoin hit $69,000. And we were seeing these types of days. Maybe not even this good. I mean, you don't get... Look at this day, George. I mean...
You don't get these, Tom.
We talked after this, like, what just happened? But now I know what happened, so we're going to get to that next. There's a reason that Wednesday happened, and there's a reason that Thursday happened. But...
And you know what's gotta just crush this poor kid is to see this.
Oh, it's devastating. It's devastating.
Yeah.
$30 billion goodbye, missed by one day.
Yeah.
But that's not an accident. That wasn't a happenstance. Should we get a new poll up before I go on?
Yeah. What do you want it to be?
Is the Fed going to... We got to... I just rambled for all that time. Let's get some feedback from you guys. Is the Fed going to raise rates in the next meeting? Let's see what you guys think. I think with a very high level of conviction, I think that they will not be raising rates in the next meeting, which is in September. That is my opinion. Let's see what your guys' opinion is. You want me to do that one, George, or are you doing it?
Oh, I'm already up. I'm ready to go.
Thank you. Okay. Now let's see what happened. How Leopold Aschenbrenner built a $45 billion AI hedge fund and lost most of it in days. We've talked about this guy. Everybody's talking about this guy. He's done the circuit. He's a very high profile 24-year-old. And we're going to read a little bit about him. He's got a fund called Situational Awareness. I guess he wrote a white paper and he called it Situational Awareness as well. And he's basically all in on AI. Directionally, I think he's totally correct. His problem is he hasn't learned some of the fundamental, brutal lessons about how the stock market works. It's not enough to know what's going to happen or to have a high level of conviction and be right directionally. He leveraged himself big time, and he got burned. He thought he had hedges. I said at the time, everybody, when he put his filing out last time, the headlines for the first 48 hours was that Leopold had gone hundreds of billions of dollars short the AI trade, the very trade that he turned $100 million into $13 billion with, he was short. Well, I said that day that came out, it was obvious, right? Everybody that knew this knew this. Everybody that didn't got fooled by the media. He bought a bunch of puts. So they were giving the nominal value of those puts, which is not a number that means nothing. But the thing is, he bought puts on the mega cap stocks inside of AI. NVIDIA, Broadcom, Taiwanese Semiconductor. So those were concentrated puts, and they were big puts. But that's not what got him in trouble. The problem is, he went ultra long, basically in this next filing, and I'm going to go through his top 10 positions. He basically went ultra long in the Bitcoin miners turned AI companies and the neocloud companies, the power companies. So he's ultra long on further up the supply chain, and then with a hedge on 3 stocks he doesn't even own. So what happened is, he 4x leveraged himself, thinking he was hedged against, a disaster. So whereas for 48 hours we got headlines, and you can go back and find them. Leopold ultra shorts AI. The guy who was all in and made his fortune on AI is $100 billion short AI. Well, these AI companies all collapsed, and I'll show you the numbers. And he got liquidated. So pretty much the vast majority of his wealth disappeared on Monday and Tuesday and then Wednesday. And here's how this stuff works. These stocks, as you guys know, had been going in the wrong direction for months. So on a leveraged position, he kept inching closer and closer and closer to margin calls. When things got desperate on Monday, the bank started to reach out to hedge funds. We got a situation here. Now, they could have just shut the whole thing down on Monday and maybe got out with what was left. But they were looking for an answer. They were hoping for a rebound. So what happened Tuesday got worse. Then they got into deep negotiations. All Leopold was trying to do is, can you guys wait it out? This is a short-term move. It's going to turn around. So now you've got the bank's already put a bunch of hedge funds on alert that we got some assets in crisis here. Are you interested in helping us get out of them? So what happens Wednesday? This happens Wednesday. So now by Tuesday, he's in pure desperation. Wednesday, for his stocks, is the worst day of the year. And I'm going to show you that. I broke it down stock by stock. So this put him into a liquidation situation where now he's lost all of his money in these stocks. The bank's lost money because they've been trying to work this out. Is anybody willing to step in and put any money to take any of this off of our hands at any price? Jane Street said no. A couple others said no. So, if we read the article, okay, so let me get into it a little bit.
That's a good one.
Driven by reported leverage of up to 400%, the 20-something manager was forced to sell off all his leveraged public stock bets, including hard-hit names like SK Hynix and CoreWeave, to Ken Griffin at Citadel at a discount. So not only had these stocks fallen off a cliff and they were practically giving them away to begin with, Ken Griffin at Citadel got to buy them at a discount on top of that. That's how desperate the bank was to just get out. The crash marks a dramatic turn for Aschenbrenner, who launched the fund earlier, gaining Silicon Valley fame with his 2024 AI manifesto, drawing scrutiny from critics over his lack of money management experience and his past ties with FTX. I am not going to hold his past ties with FTX against him. I don't know what he did there. I'm sure there were a lot of people working in good faith. The problem, I think, was more at the top and with others long since water under the bridge. But I think it is fair to say at 24, not really being an investor, managing a fund, obviously, he kind of missed some of the 101 level stuff here. This was a disaster.
One is shut your mouth.
Right.
Shut your freaking mouth. Don't tell anybody anything.
Right. Here to George's point, there's typically about 10 hedge fund managers. Not their money. Like a lot of this was this guy's money, but he was also had fun. There's typically about 10 hedge fund managers a year that their commission is over $1 billion.
Some are over 5 billion.
Does anybody know even one of those people's names? No, because they keep their mouth shut.
You don't want me to tell you their names?
Well, you can look them up. If you research it, you can go find out who they are, but you're not going to see them talking on CNBC or Bloomberg or at the top of the highest mountain screaming. In fact, a lot of these hedge funds turn away potential investors because they want to limit even the number of people that know what the hell they're doing. Otherwise, what they're doing doesn't work. So, but his real mistake is he massively leveraged and had no protection against it. The whole market knew it because you got to file this stuff, so they knew I'm going to go through his holdings. Here are his top 10 holdings. Bloom Energy, so that's an energy play in AI. SanDisk, that's a chip maker. This was the weight of its portfolio according to his most recent filing. Now we get into our stocks. CoreWeave, his third biggest holding. IREN, his fourth biggest holding, one of our stocks. Core Scientific, his fifth biggest holding, one of our stocks. Applied Digital, his sixth, one of our stocks. Riot Platforms, his seventh, one of our stocks. CleanSpark, his eighth, one of our stocks. So when I say he went all in on our basket of stocks, he went all in on our basket of stocks. So they took these stocks. We just had pain, suffering, and misery. So they could take his top 8 positions out so they could buy his fund for pennies on the dollar. That is the sequence of events. Now, you can imply or infer any intent that may or may not have existed is going to be your own personal belief. But those are the sequence of events as they occurred.
See, now, if this was a true AI program, they would have produced all this and shorted every single one of them.
Who, the situational awareness guys?
Yeah. You see what I'm saying?
That's right. Exactly. His own mechanism should have. So, right, you got to file a 13F. So the whole world knew what he bought. But what was more than that is he made a big deal about how he turned $100 million into $13 billion. Well, guess who doesn't like that? Every single hedge fund manager in the world. From a 24-year-old, in their eyes, newbie who doesn't know where the bathroom is yet. Never mind how to manage a hedge fund. So,
That's
in my opinion, they were going.
Did anybody invest money into him, Tom? Do you know?
Yeah, this was a fund, so this wasn't all his money.
I wonder who got wrecked.
This is brutal. I don't know what to say. So here. So these are I took his top 8 stocks just so that you can understand why he ended up in this position. My earpiece for a second. Here. This is what happened to these stocks. From their highs to their lows in the last 3 months. So this is AI and infrastructure stocks. You'll see 1 through 8. These are the 8 stocks I just talked about. These are his 8 biggest holdings. Peak to trough. IREN down 59%. SanDisk down 57.6%. CoreWeave, and I'm going to get to the thing that's even worse than this. CoreWeave down 56%. Bloom Energy 55%. Applied Digital runs up to 55%. Riot 42%. Core Scientific 41%. CleanSpark was the best performer in his portfolio, down 38%. But here's the other thing. Wednesday, the day that I told you they took him out, here's the date of the lows. So these lows that you see for all 8 of these stocks, IREN, Wednesday, July 29th. SanDisk, the 29th. CoreWeave, the 29th. Bloom Energy, the 29th. Applied Digital, the 29th. The only one on this list that did not bottom on the 29th was Riot. That was on July 17th. Core Scientific bottomed on the 29th. CleanSpark bottomed on the 29th. So he literally took 8 of his top 9 positions and got them to 52-week lows on the same day, the day that the day after he had already been margin called and word was on the street that he needed help. So what did he get that day? Every single one of his stocks shorted down to lows. This is what happened.
That's just, look at that. That is just a sea of red.
Is this a wild coincidence? Did he just get horribly unlucky? Does he have bad timing? Because literally, these stocks, the next day, he held these stocks until this day. This is the first day that he did not hold these stocks. Up 20%, 21%, 25%, 30%, right? The best day they've had in years and years and years and years was the day after he was out of margin call because he lost all his stocks. You can infer from that whatever you want, but I think when you look at this, I just do not see how you can draw any other reasonable conclusion. Now, if I were arguing with ChatGPT right now, which I do sometimes, they would tell me, well, you can't prove that they did that. You don't know what was in their mind. You don't know what their intent was. So that's their plausible deniability. And that's exactly why they can do it. Right? Nobody can say, well, you did this for X reason. You don't know what reason we did it for. We did it because we thought they were oversold or overbought and they needed a correction. As ludicrous as that is, when they go up 20 to 30% the next day, it's a very hard to defend position, but it's plausible. It's plausible. So that's it. This is why we had the week that we had. So I was scratching my head during a lot of these days going, what is going on? I mean, I know things are volatile. It's all we ever talk about, but this is new. This is next level. Well, this is what was going on. In the meantime, we had historic things happening as last week and this week, Mag 7 announced earnings. What's that? Oh, George, did you write that on my behalf? That was not me.
Yeah, that was me. Yeah, talking about Pogo and Sour about how they he likes Kathy Wood, and I said, well, some people like them old.
I will tell you, maybe she's going to be right over 10 or 15 years, but she hasn't been very right over the last 5. She's very popular. She's very well known. She's on the circuit. She's super high profile.
Well, they kind of did the same thing to her.
They did. And her fund, while it's very big, in numbers that we think about, it's really rather small compared to the big dogs. So I do think you're right. They did a lot of this to her over the years. Now they couldn't do it. This was small enough. They took him out. And yeah, SanDisk was ready for a pullback. IREN wasn't. IREN wasn't ready for a pullback. Right? There was no IREN, Applied Digital, CleanSpark, in specific, all had massive deals that they signed. The best deals they've ever had in the history of their company. This was not the time where their stock should get destroyed. But it did. So I have high level of conviction in these. I hold a lot of the stocks, not all of them, a lot of the stocks on this list. IREN is my biggest position in my portfolio. I own Riot. I own CleanSpark. So, and most of these are the stocks that we follow. And so I got punished for this. You guys probably got punished for this. The good news is I think it's short-term stuff because now they've done what they've done. Might they drag it on a little longer just to squeeze the last dollar out of us? Because that's what they want to do. So we'll see. But I'm not selling. I will sell into strength. Ultimately, I am going to sell my marathon position. Now, this isn't all of his positions. He also held positions in other former Bitcoin miners turned AI plays. I know in specific, he owned a position in Keel, formerly Bitfarms, and there were others. So he was all those were new positions in this last filing, right? The first filing, he was more involved in Bloom Energy is still his biggest position, and SanDisk. So this was round 2, just kind of moving back in the supply chain. So I think directionally, he was right on the money. What he didn't know is there's enough money in the market that, he thought his billions of dollars would get it done, but they didn't. So it's unfortunate. All right, now let's get to what's going on elsewhere in the market. Because we had earnings and we had some historic earnings. Let me just...
81 likes, Tom.
81. All right. Thank you, everybody. We're picking up some steam. If you haven't smashed the like button or if you just got here, it sure does help the channel, and we really appreciate it. I'm spending a second looking for a specific article. And if I don't find it in a second, I'll just talk about it because I got some other. All right, so let's just go to this one, and then I'm going to segue into the next section. Dwindling cash and soaring memory costs. Tech's AI build-out has ballooning price tag. And this goes back to a comment much earlier in the stream. So here we are. Amazon, Alphabet, and Tesla all reported negative cash flow in the last quarter. while Meta's cash generation plummeted by 91%. One of these companies, who was it? It was Alphabet. Alphabet reported the first negative cash flow in a quarter in the history of their publicly traded company. So they had never had that happen before. So this is a lot of cash. There is a way to read this that can be very disturbing. And it may well be disturbing. Time will tell. The AI build-out is having a massive impact on corporate balance sheets, and costs are going up even more than expected because of the memory crisis. So, this is where the market talks out of both sides of their mouth. Every single one of these companies talked on their conference call about how they had to make deals with the high bandwidth memory companies. Most of them called out Micron in specific, that they are getting ahead of this problem. They're already way behind the problem, but by their mind, at least they're securing their supply chain, because their problem is if they can't get these memory chips, they can't conduct their business. Like the ramifications for these companies is hundreds of billions or trillions of dollars. They can't have one piece of their supply chain stop them from conducting business. So what they've done, the trade-off they've made, despite the fact that high bandwidth memory price has doubled or tripled or more, they've agreed to long-term contracts over the next multiple years to buy more of these chips. Every one of these companies projected 2027's CapEx is going to be more than 2026, and every single one of these companies broke their CapEx all-time spending record this year in 2026. So for those of you hoping and expecting and waiting for this to end, I'm not going to say we're at the beginning of it, but we're in the middle of it. And these numbers are historically large. So this is why I told you the one thing I did buy, and the rest of that story, I told you I bought some DRAM and some AMD. I stayed up all night Wednesday night because it just, the catastrophe that happened on Wednesday, I thought represented one of the greatest buying opportunities in many years. So I put a plan together. I literally pulled an all-nighter, put a plan together on how I was going to capitalize on this on Thursday. The market opened 1 minute later. It was too late. So that night was wasted. I bought nothing on Thursday. It is what it is. At least I didn't sell.
I bought IREN and CleanSpark.
Nice.
Took what little bit of powder I had left, but the good news is I have more powder. I just don't know where to put it. Because I still think there's a shakeout coming.
And I think there very well could be. First of all, a lot of these things in my mind, if I wasn't invested at all in any of these, I still think most of these, in my opinion, are in a buy zone.
Well, you said IREN's your number one. And until I get more information on CleanSpark, I still am putting them as my number one. They're sitting at 13.76. To me, it's a $20 stock. I don't know why it's not there.
I have a high level of conviction there too. Ethan is saying if there's negative free cash flow, can't really see CapEx continuing to expand. So I put together a bunch of numbers to address that because I know that is the narrative. And to a certain extent, this can't last forever. So I think everybody understands there's not 10 more years of $200 billion a year of CapEx coming from these companies. But they're not done. They're all going to break their all-time record this year, and they're all going to beat it next year. And I'm going to show you how they're going to do it.
The only thing I can say is EV, by the way.
Electric vehicles?
Yeah, negative cap rates. I mean,
very different because the EVs had negative cash flow. So, for instance, companies like Rivian and Lucid Motors, they were having negative cash flow annually of $2 or $3 or $4 billion a year. But they were also having net losses of $2 or $3 or $4 or $5 billion a year.
$1 billion. You're right.
So,
but my whole point is, look at what they did. Look at what their highs were.
right, they skyrocketed anyway. That's right. All these guys ever did still to this day is lose money hand over fist.
Right.
And now
these
they're
are
down
actually,
dramatically, but you know,
right.
they ran to the moon.
Right. And now these companies have a path to really make a ton of money. And they're here.
So let me show you the rest of this story because, you know, looking at this, Ethan brought up the critical question. And then Ethan's saying, what are they going to buy it with? Hot air? Well, I have the answer to that. So here I put together a little presentation that I called Big Tech War Chests. I included Apple, although they're not big AI spenders. Between cash and short-term cash equivalents, Apple has $162 billion in the bank. Google has $148 billion in the bank. Amazon has $130 billion in the bank. Microsoft, $123 billion. And when I say in the bank, some of that is in short-term marketable securities that are cash or cash equivalent. And Meta has $90 billion. Okay, so you go, all right, well, that's enough for one more year. And then they're done. But wait, in addition to having over $100 billion on their balance sheet, hyperscaler capital expenditure guidance. Oh, I may not have the one chart I'm looking for. View guidance change. Let me see if I can find this. If not, I will just tell you. Because there's the important piece to the rest of this puzzle.
No.
All right, give me 30 seconds.
I'll give you 30. While you take the 30, if you would be so kind to hit the like button, we would appreciate it. We are at 86 likes. And we need a new poll. If anybody has an idea for a poll, let me know. And I will poll it.
Let's see how this poll's doing.
%54% say remain the same. Up 25% is 23%. Up 50 basis points, 5%. Down 0.25, 18%. I'm going to close that poll. I guess when I was thinking about this with that hedge fund guy, I guess he missed one statement. And that one statement was, the market can stay more irrational than you can stay liquid. And he found that one
That's right.
the hard way.
Leveraging Forex on, here's the thing. He didn't leverage himself Forex on NVIDIA, right? You're not going to push around a $5 trillion market cap company, although they do more of that. I'm going to talk about some of that. He Forex leveraged himself into small companies with no direct protection at all, right? Because he bought a massive amount of puts, but not on any of the companies that he owned. So that amount of leverage we've seen time after time, 5, 6, 7 times a year, the market gets washed out, right? Leverage gets evaporated. And it's more than that. It's 25 times a year. This happens on a regular basis. It just doesn't usually happen to one person at this scale. I mean, this was brutal. Okay, so I don't have my nice fancy chart, but I do have the information. Annual cash flow from operations. Meta Platforms, 2025, $115 billion positive cash flow from operations. Microsoft, 2025, $136 billion of positive cash flow. Alphabet, $164 billion of positive cash flow from operations. Amazon, $139 billion of positive cash flow from operations. So how is Microsoft going to spend $130 billion on CapEx next year? Because they're going to get that much money from operations. Alphabet, 160. Now, to be fair, it won't be exactly like that. There will be some, like in all likelihood, some combination of using their cash flow from operations, using some of the $100 billion plus war chest that every one of these companies have, and possibly adding a little bit of debt. Now, these are multi-trillion-dollar companies. So if they go borrow, if they take 30 of this from the debt or equity markets, 30 billion a year, nobody cares. Nobody cares. It doesn't affect their balance sheet at all. So they have more than enough money in the bank. These are the biggest cash flow generating machines in the history of the known universe. They could do this. They could, if they wanted to, they could do this for the next 10 years. They won't, but they could. So there is no cash crunch. These guys generate cash like it's going out of style. And not only do they generate cash, but they have cash. Right? Alphabet's got $148 billion in the bank, and they're going to generate approximately that much more in free cash flow from operations next year. So when you see negative, Google was negative $1 billion of free cash flow. Well, that means if they're negative $1 billion free cash flow, that means that they can keep doing this for the next 148 quarters because they got $148 billion of reserve to make up for that. Obviously, I'm not suggesting they're going to do that, but there is no cash flow issue here at all. These companies are the richest companies in the history of the world by far. These are all the largest market cap companies in the world, and they have nothing but cash. So they're going to spend. Yes, we have a technology shift. So that's the poll I'm going to do right now, because here's what it comes down to. This is everything about investing for the next 5 years. Here it is. The answer to this dictates everything for the next 5 to 10 years. Do you think that AI is a fundamental shift in the economy? And I'm saying, think the internet. Think the Industrial Revolution. Is AI on that scale, or is AI a passing phase? Is AI the metaverse, which ended up grossing less than 0.0001% of the estimated revenue that it was hoping to gross? Is it Google Glasses, or is it the internet? Because that's the whole question. If it's the internet, if it's the Industrial Revolution, and these companies don't do this, they're done. They will be replaced by the companies that do this. So it's really, they can have a 10-hour board meeting, but it really comes down to that question. Because remember, this is core to all of their businesses. So they either need to abandon their business model or enhance their business model and lean into AI. It's one or the other. Okay, now let's talk about some fun stuff, because this week was madness. The greatest earnings week in market history. We set 2 number 1 records in the history of the stock market in the last 2 days. And a third one that wasn't far behind. Number 1, Microsoft. Microsoft was up 15.5% at the time that I made this graphic. Or Microsoft may have been yesterday, so that was the final number. One or more of these was today, and so this was near 4 o'clock, but not at 4 o'clock. Okay, so for Microsoft, they added $450 billion of market cap in one day. That is the number 1 all-time gain in market cap in the history of any company in the history of the stock market. So we like to throw a lot of these stats out there. This is not hyperbole. This is the biggest move any company's ever made in the history of the stock market. This is, to me, much more of a reflection of the fact that because they had very good earnings, they had some great proof of concept on their AI stuff. Like, this was a very good quarter for them. They beat, they raised, they checked a lot of boxes. But a lot of this to me was Microsoft has spent 6 or 8 months trading as a software stock and getting destroyed. I'm going to go to the chart. So you can see, look at this jump. Right? This was one day. That's 15.5%. At the peak, it was 17%. But the problem is, from October of 2025 until June, last month, the end of June, Microsoft was down 37%. This was trading in tandem with the software stocks. People were acting like AI is going to put Microsoft out of business, not understanding that is their business. So, Now, from the bottom, and this is one of the ones that I bought because they were giving it away. This thing's up 31%. Now you can see it's running right into some resistance. It got up here in May. Will it break out and keep moving? I don't know. Who knows? But I think this had a lot more to do with the fact that this stock got taken out for no reason. And when they saw what this company's really doing, everybody at the same time said, I better stop shorting Microsoft. And some of them said, not only should I stop shorting it, I better go long. And so in one day, we had the greatest single day by market cap in the history of the stock market. I find this surprising. I mean, does this surprise you guys? Okay, so that's not it. Because within 24 hours, Apple announced earnings, and they had the worst day in the history of the stock market. Now, ironically, the day before this, Apple overtook NVIDIA. They went past $5 trillion market cap and became the largest company in the world, a spot they're very familiar with. They've held that spot for half of the last 20 years, so it's not new territory for them. But they did, just the day before this, go over $5 trillion in market cap and become the biggest company in the world. Well, in one day, they took that out. They lost more market cap in one day than any company in the history of the stock market. $380 billion. So with all that action going on, I don't think it got lost in that, but Amazon was up 15%. They added, and we'll go look at where they finished. I think this was today as well. Here, this is actually what I was looking for earlier.
I gotta run. I gotta go eat.
George,
Food.
have a great night. Have a great weekend.
Thanks, everybody. I'll be on the chat. I'll be in the chat. See ya.
All right, cool. See ya. Microsoft stock rockets more than 15% for the largest single day jump in history. So if we go to Amazon. So this ended up, because again, the market wasn't quite closed when I did this. Amazon ended up 15.32%. At the time that I made this chart, they were up 15.3%. So that's basically where they ended up $360 billion. Top 10 all-time day of any company in the history of the stock market. And it wasn't even the best stock this week, because Microsoft did almost $100 billion better than that yesterday. So now I didn't include them because they weren't at this scale, but we had dramatic moves in Google. We had dramatic moves in massive sell-off in Meta. They just weren't at the scale of the top 10 in the history of the stock market. But here's three of them right here. And two, the best day and the worst day of all time for a single stock, as measured by the amount of market cap they added or gained, happened 2 days in a row this week. I do worry about Apple long term. I don't know why their stock is on fire. I don't own Apple. I certainly wouldn't own it at $5 trillion market cap. And I'm not convinced that they're keeping up with what's going on. We'll see. That's just my opinion. I don't own that stock. I don't short that stock or any stock. I don't have a warm and fuzzy feeling. Had Amazon kept falling, it was on my watch list to add to my portfolio, but it turned around. It got down to 190. It had got down to 165 within the last 52 weeks. I wanted to see if it was going to retest those lows before it turned around, but all of that got thrown away in one day. It was 190 a couple of days ago. It's 271 now. So that ship has sailed. Doesn't look like I'm going to get my swing at Amazon, who I'm very confident is headed in the right direction. When you get to companies like this, it's no longer, in my mind, it's no longer a question of, is Amazon a good company? Are they in the right space? Are they doing the right thing? It now just becomes a question of valuation. Is all that already built into their valuation and they've had their run, or is there room left? And I will tell you, Amazon historically has traded at monster PEs, which is why if we look at their stock, I'm going to go to a 1 week. Right, they spent really from July of 2020 to July of 2024. That's 4 years. We can keep going. This is May of 2025, 5 years later, trading in the exact same zone. So they went sideways from 5 years, but they went from something like 170 PE to like a 30 PE. And that's why they're up 67%. So historically, their PE has been anywhere from 50 to 200 for the last 8 or 10 years. They spent a bunch of time growing into that PE and going sideways. So to me, this was not a good time to hold Amazon. It felt like I will never buy a stock that has a forward PE in the 60s or above. Just won't do it. So that's just me. There's lots of times where if you do that, you'll make a lot of money. So I'm not giving financial advice. I'm just telling you, I won't do that. I can't do that. I won't have any conviction in that stock. But Amazon at a 30 PE, I have conviction in that. But, this was a pretty big move in one day. So we'll see. And I'll just, probably some hate's going to come in on this one, but I'm just saying, if you look at, there's a couple of these companies out there. Palantir's at 138 trailing PE. Big difference between trailing and forward, but how much better is that going to get? So they're looking in the next 2 years to maybe more than double, maybe close to triple their earnings. But the problem is that gets them from like 140 PE to still, just under a 50 PE. Still very large. So I don't understand that. And I'm going to give you two stocks that, to me, this is where the market just decides certain things and it takes them a long time to figure out. And I don't think it takes big money a long time. They know exactly what they're doing. They manipulate the 95% of the rest of the people investing and make money along the way. But I'm going to look at two companies. I own both of these companies for different reasons. I own AMD. In a very rare move, sometimes I will buy a stock on momentum. I think AMD has massive momentum. They are at the center of this AI situation. They're really the only alternative to NVIDIA. And they look at so this is a stock I wouldn't own under ordinary circumstances. They have 158 trailing PE. If we go forward, they're doing the same thing. They're looking to maybe triple, a little more than triple their earnings from last year to next year. But still, that only gets them to, we're talking the same type of thing. That gets them maybe to a 50 PE. I don't have conviction in that. So this is not a buy and hold for the next 5 to 10 years for me. I think this is going to have a big run up, and then I'm selling it. And if it doesn't, I'm selling it anyway. So I'll either get this one or I won't get it. I'll stop out. If this gets, I'll tolerate 15 or 20% to the downside from where I got in. And that's it. This is not my normal trading at all. I very rarely do this. I just feel like this is one of 5 companies that you could name that's at or near the center of the AI trade. So even though it's gotten ahead of itself, I think it's going to keep going. Compare and contrast that to Micron. You're going to get everybody else on the internet. You're going to get everybody else on every channel, every hedge fund, everywhere to explain to you why Micron is the exact opposite of NVIDIA. NVIDIA's irreplaceable. They deserve a monster PE, a premium PE well above what the S&P 500 trades at. Whereas Micron merely sells a commodity. Insert company here and they could do the exact same thing. So this company's garbage. It deserves no forward PE. So where we just looked at, if all goes well, AMD is going to maybe get down to a 50 PE next year. Micron's trading at a 5 forward PE right now. 5. So AMD's valuation is 10 times Micron's valuation. Now, I'm not saying they should be 1-to-1. Right? I'm not saying this should be a $10 trillion company. But I am saying this company trades at, I don't know why they're not showing their market cap, but it's about $1 trillion. I think it went under $1 trillion. It was over $1 trillion. It just went under $1 trillion. They've pulled way back. They were up to over $1,200. They've pulled way back. But here's the thing. At $823 a share, right? This is their share price. They're looking to earn $153 a share next year. Remember, their share price is similar to AMD, right? It's maybe 75% higher than AMD's. But AMD wants to make $13 next year. These guys are going to make $153 next year. And I say going to, but that while that is not an absolute fact, these contracts are already written. So it's a highly educated guess. And if you look, they usually beat earnings because they just have their pricing power is actually still in a growth phase. They just locked in long-term contracts with almost all of their customers at higher rates than they're selling their high bandwidth memory right now. So they know their profit margin's going to go up. This is a hardware company with gross profit margins over 80%. And they're going to be way over that next year. Software companies dream of these numbers. So the thing is, that puts them at a 4 or 5 PE. You've got most of the rest of these companies at 30, 40, 50 PEs, 100 PEs. So now, if you dig in and do your due diligence, you will see that high bandwidth memory, while it happens to still be called memory, this is not like any other memory. This is a completely different process. And there's only 3 companies on Earth that make high bandwidth memory. There was some FUD put out this week that a Chinese company is going public, just went public, and they're going to be in the high bandwidth memory. I might still have some of the Cliff's notes on that. Let's see if I saved it. Here, while we're talking about it, CXMT. Is CXMT a competitor to Micron in high bandwidth memory over the next 4 years? So I'm just asking chat right here. Take it for whatever it's worth, not that they're the experts. CXMT just did a public offering. They did an IPO. They raised $8.6 billion. So that $8.6 billion was supposed to put them in competition with companies like Samsung, SK Hynix, Micron. So to put things into perspective just a little bit, this company went and raised $8.6 billion. That's their war chest. All 3 of the companies that I just named have monthly cash flow from operations in excess of that. So whatever CMXT is going to do with their one-time only IPO, all 3 of their competition get that much cash every single month just from doing business. No stock dilution, no debt borrowing. That's just them doing business. If we're talking specifically about high bandwidth memory, my assessment is no, not over the next 4 years. At least not as a peer competitor. So just so that you understand, right now they make no high bandwidth memory chips. They do not own a machine that it takes to make a high bandwidth memory chip. Those machines are on a significant backlog to even get one. Once you get one, it usually takes companies about a year to calibrate it, learn how to use it, to even make their first chip. In addition to that, you'll see down here it says long customer qualification cycles with NVIDIA, AMD, Broadcom, and hyperscalers. They are not even approved. So particularly NVIDIA, which is the biggest buyer of high bandwidth memory, AMD, Broadcom, right? They actually make the chips. This is the high bandwidth memory universe. It's bigger than that. There's other companies, General Motors, lots of other companies. Long customer qualification cycle. So by the time you finally get your machine, figure out how to make a chip, you got to produce some chips, give it to these guys, and show them proof of concept that you can deliver viable chips that are competitive with the companies that are already approved. So they have a 3 or 4 year cycle just to even get approved to sell their first chip. So these Micron tanked on the news that CXMT was coming to market and going to be a competitor and dilute the high bandwidth memory space. Well, here's the facts. You can check them for yourself, right? Don't believe me. Don't believe anybody. Always go fact check for yourself. See what's what. But this is what's going on. So today, Micron, SK Hynix, and Samsung have years of experience shipping high bandwidth memory into production AI systems. CXMT does not. And those capabilities take years to develop and validate. So they're just simply not competitors. So the next time you see this, and you will see it again, don't buy Micron. CXMT is going to take them out. Well, not in the next 4 years. And I put 4 years for a reason. When you start making investment thesis on what's going to happen 5 or 8 or 10 or 15 years from now, that's not really what the market's trading on today. What the market does know is that for the foreseeable future, CMXT has no chance of even delivering a single high bandwidth memory chip. That's what they're trading on. That's what the big money knows that they're not telling you. What they're telling you instead in headline after headline after headline is that these guys just came out and Micron's screwed. So for whatever it's worth, this is my take on that. And I don't even know that it's a take. This just is what is. JP Morgan says fading Clarity Act odds weigh on crypto outlook. So I'd like to say I'm optimistic. By the way, I'm going to take a time out and go to this poll. Also, do us a favor, if you would be so kind, smash the like button. I see George in the comments saying, I'm so hungry. Have a good dinner, George. Oh, that's Doug said. George is getting close there. You're going to be ringing the dinner bell. So George is still listening on. Gary's asking, the last 2 times there was a world-changing technology, railroads and internets, early investors saw their potential but went bankrupt investing in the potential. Why is AI different? So to me, I'm focusing on, that's a valid question, and that's a part of our history here in investing. You know, what piece of this puzzle are you going to get? Are you early? Somebody else is going to win later? I'll give you an example of somebody who succeeded. Amazon was early on the internet. They got destroyed. They went sideways for years and years and years. But guess what? Now they're one of the 5 biggest companies in the world. They just reported one of the 10. They just. Let's get to it. They just had one of the 10 best days of any company in the history of the stock market. Now, it's 20-something years later. So, yes, Amazon was early. A lot of their peers, the pets.com of the world, they were early and they didn't make it. But here's the difference, and this is what you got to look for, because there will be some companies that don't make it. And I'm going to tell you which ones I'm most worried about. Amazon had a business model. Amazon had lots of revenue. They had not scaled yet to be highly profitable. They also just kind of got flushed down the toilet because the entire .com bubble was a disaster. It was full of companies that had no revenue, no plans for revenue. That's not an exaggeration. There were companies that were trading on how many viewers do you have? How much traffic do you get to your website? We'll figure out how to monetize that later. Right now, our revenue's 0. We lose a bunch of money every year, but we're getting eyeballs, and eventually we'll monetize those eyeballs. Now, I'll tell you a story of one of those companies that succeeded. Early in that time frame, years actually after the .com bubble burst, a very young Mark Zuckerberg was approached by Microsoft and offered $100 million, I think, for 10% of his company. A company that life to date had zero revenue. Zero. Projected revenue for the current year, zero. Projected revenue for next year, zero. And Microsoft was willing to offer them $100 million. And you can check the exact numbers because I'm going 20-something years back in my memory. But they offered them something like $100 million for 10% of the company. And by them, I mean a 20-something Mark Zuckerberg. And he said, no, thank you. And I will tell you, in real time, at that time, I said, is this kid crazy? Is he out of his mind? This has to be the dumbest decision anybody's ever made that I can think of. He has nothing. Somebody just offered him $100 million for 10% of his nothing. And remember, he was just out of college. He was, I don't know, 22 at the time, maybe. Now, he came from an affluent family, but they weren't, $100 million is a different level. But he held his ground, and guess what? Now he's one of the 10 biggest companies in the world. And his 100, that would have been the worst deal he could have possibly cut. So, sometimes it pays off. Some of these businesses did come out and make their way. But for every one success story or two, like Facebook and Amazon, there's 100 companies that they did not have a business model. They had no revenue. They had no line of sight to profitability. And they were just trading. You couldn't put a PE on them because they didn't make any profit. You couldn't even put a price sales on them because they weren't even selling anything. So the dot-com bubble was just a different universe. These companies that are exploding, they're already having proof of concept. They're having Microsoft's going to have $100 billion of revenue in their web AI. Amazon, same thing. Micron made more money last quarter than it made in the 3 years, all added up, put together before that. Micron has a business. They sell high bandwidth memory chips. Those chips are in demand, and they're going to make we already know they have contracts out far enough that let's even say we're overbuilding and 5 years from now there's a reckoning. By then, Micron will have made somewhere on the order of $500 billion. So while they may have to switch gears, their business may scale back, they're not going to be a loser of the AI. They're going to make $500 billion of profit, net income. So this is where you got to be careful and pick the winners. I'll tell you the ones I'm more concerned about. We haven't really seen behind the curtain on ChatGPT or OpenAI or Claude, Anthropic. There's going to be a lot of large language models competing for marketplace. I don't know that business model is mature enough and is profitable at this point. So they're going to IPO. It looks like they're, both OpenAI and Anthropic look like they're both going to IPO at around $1 trillion market cap. They might end up losing. So, to your point of being early and losing, those are more the face of AI to the consumer. When they think of AI, unless you're in investing, when you think of AI, you don't think of Micron or IREN. You think of ChatGPT. You think of Claude. So I think that's where you're going to potentially see some losers. There's plenty of other software-related products that people are trying to integrate their AI around and sell as a business model that is unproven thus far. So I think there will be winners and losers. But some of the winners have already won. Right? It's too late after a company like Micron that was a $40 billion market cap company a year and a half ago made $40 billion in profit last quarter It's too late to say they might lose this game. They already won. The question is, how much more are they going to win? And as an investor, the question is it a worthy investment? Well, it looks like they're trading at about 5 times price earnings. I do not think that is the top of a bubble. Even if you argue, listen, over the long term, that's where they belong. There is no way on this earth that you can argue they are now currently in a bubble because they're trading at a 5 PE. So it's about investment opportunity. I think there's massive upside to Micron. I don't know, right? Because the future hasn't played out yet. But to me, a company that's already written all their contracts for next year, they're sold out for next year. They're telling customers for 2028, we could partially fill your orders. Will this peak at some point and supply will exceed demand at some point, 5 years from now or 6 years from now, and then we'll see what happens for the next 5 or 10 years after that. But it's not like competition's going to run in, because high bandwidth memory is every bit as difficult and proprietary in many ways as what AMD does. And they trade at 150 PE. And they don't make nearly as much money as Micron does. So to me, I think, there's a mispricing. NVIDIA, which has a lot of competition coming. If you go to NVIDIA, they are trading at a 30 PE. To me, that's extremely reasonable. Believe it or not, for as much money as they've already made, and given the fact that today they just regained status as the largest company in the stock market, this is still a high-tech, high-growth company. This deserves a multiple. Look at the growth projected. From 2026 to 2027, they are projecting 82% growth. This is like a micro cap stock or a nano cap stock. That's the kind of growth you expect out of your micro cap companies, not out of the biggest company in the world. Next year, 42% growth year over year, $500 billion of revenue. Profitability, $4.70 to $8.99 to $12.87. All of this tells me I am comfortable with a 30 PE for a high-tech, ultra high growth stock. Yes, it happens to be a $5 trillion stock. That's a little disturbing, because you do the math and go, man, even to catch a double on this one, it's got to be a $10 trillion stock. Well, it looks like that's what's happening. So I would rather have these guys at a 30 trailing PE than their direct competitors, AMD, at 150 trailing PE. But ironically, I own AMD because their market cap is tiny compared to NVIDIA, and the market is going to treat them like the only thing out there that is any competition to NVIDIA at all right now, other than some companies like Meta making their own chips, but they're not going to sell those to the marketplace. There's a few of the gigantic multi-trillion-dollar tech companies that are making their own chips that work specifically for their environment. They're not for public consumption, but at least it lessens their reliance on NVIDIA. So NVIDIA is going to have some pressure from that, maybe from AMD, we'll see. But NVIDIA is 6 or 7 times the market cap of AMD. So people are going to perceive there's a lot more room for AMD to run. I think that perception is going to run out. That's the bubble play. I don't do a lot of those. It's not a gigantic position for me. It's not one of my top 10 positions. It's half the size my Micron position, which is half the size my DRAM position. So DRAM is really where I'm betting, which is on a basket of the high bandwidth memory companies, two of which, SK Hynix now trades in the United States as depository shares. But I will say they are selling at a fairly high premium to the underlying stock. So I would rather buy DRAM, get a piece of Samsung, which I can't get in the US, get a piece of SK Hynix at market value instead of a 30% premium, and get a piece of Micron, which I have a high level of conviction in. I'm also getting the other quarter of that fund is things like SanDisk and Seagate and Western Digital and those types of things. So that's why I have a conviction in that stock, and time will tell. I don't know. I mean, the market is clinging to this narrative that high bandwidth memory is a commodity and commodities are worthless. And Michael is asking, what happens if Cramer is right and we are in a bear market and the problem with MU is down $8 more in after hours? That makes many tech doing offering like Google did about a month ago. So Jim Cramer is very entertaining. I haven't watched him in many, many years. I used to watch his show. He's a good showman. He's actually a former Goldman Sachs trader. So I'm not disparaging Jim Cramer, but I'm not taking financial advice from him either. He looks at every single stock in the entire stock market, right? If you watch his show, he has the flash round. You name a random stock, he'll give you an opinion on it. He has not done a deep dive, in my opinion. If this is his conclusion, he has not done a deep dive on what's going on, because what he's saying makes no sense to me at all. I think it's the opposite of what's happening. But the comment before that was, Cramer said tonight that we could be in a bear market. Keep your winners and sell your losers. Well, I don't ever disagree with that advice. Reassess your portfolio. If you've got losers in there, get rid of them. I'm not going to disagree with that, but keep your winners, I think, is an important part to remember on that. I, from time to time, will flush. I'm doing it right now. I have assessed, and this is only my opinion, this is not financial advice. Please do not ever go out and sell this stock and say, I told you so. I'm just telling you, I'm selling my marathon. I have lost confidence. I've hung with them for years and years. I'm now back in the red with them. I am going to sell into strength. I'm not just going to dump their shares. I do think they will have a run in general with the rest of the stocks. And then I will get rid of those shares. That will accomplish two things. It's going to free up some money for me to buy some other things that I do have high levels of conviction in that are in different parts of the market, so I can reduce my concentration risk into higher conviction trades. So that's a part of, in that regard, I'm doing what Jim Cramer said. Sell your losers. I hope Marathon has many years of great success, but I've waited 5, and it doesn't seem to be getting better, in my opinion. That's just my opinion. I will tell you, if AMD goes down in after hours, if Micron goes down, although they need to go down a bunch. I'm not dollar cost averaging into Micron this high. I'm already, as I dollar cost average into DRAM, I'm getting a piece of Micron. I'm okay with that because I get SK Hynix, I get Samsung, which is trading at an even lower forward earnings than Micron is. Samsung is maybe one of the top 5 most well-known brands in the world. And most people don't even realize they make the vast majority of their money selling high bandwidth memory chips. They're in practically every other industry known to man, and the market treats them like they're a big piece of garbage. So I'll take Samsung all day long. So I will sell until something fundamental changes. A company that's sold out years in advance at drastically increased prices and profit margins is not a company I'm running away from. It's just not. So, Kudab. I think he's saying I want to buy Micron now. So George is still here listening. He's Kudab. He's still with us. I've pounded the table on Micron. Everybody knows my position on Micron and in Micron. So let me get to another thing here. I just want to show you guys, as these stocks were getting beaten down today, the Korean market was up 18%. And understand the Korean market essentially is Samsung and SK Hynix. I think they make up something on the order of 60% of their market. They're both in the neighborhood of, or a week ago, they were both $1 trillion market cap companies. I think SK Hynix has slid under that now, but so while we're over here selling them off, they were up 18. The Korean market in its entirety was up 18% today. Now, they went through a massive downturn. Right, if I go to the 5-day, if I go to the 1 month, they got up to 9,000. And in a short period of time, they traded down to 5,500. But that was yesterday. I think you can ring the bell. Yesterday was the bottom because they didn't just bounce back. They're up 18% in 1 day. So I think they had a huge leverage problem. It wasn't that their stocks had run up too much. Like I said, SK Hynix and even more so Samsung, those are trading at 3 or 4 or 5 PEs. They're not overbought. They're just over leveraged. So what happened to Leopold with situational awareness happened to everybody in Korea. Mass liquidations, which is a self-fulfilling thing that just keeps driving the market down. But they've flushed that out. And they're on the mend. So I think you're going to see those companies go up. So every time we sell Micron over here, understand it's against the backdrop of the other two companies that were up massively. This was their today. So they were up 18%. And our stuff was down over here. So go figure. Do you think AI is a fundamental shift in the economy? 92% of you say yes, that you think it is. George is saying, man, I'm old. I don't know why. I don't know why. Was that in response to somebody in the comments section? All right, so let's just go. I don't think we did this yet. This was this week. Mostly red. Even with that green day on Thursday where everything was up between 20 to 30% in one day, the best stock on this list was up 1% for the week. Almost everything was red. Riot down 10%. BitDR 9. Core Scientific 9. Keel 7. Marathon 7. CleanSpark 5. These were not gigantic moves down, right? We had a lot of 1s and 2s and 3s and even a 4%. Bitcoin was down 2% this week. Most of these were not dramatic, but the only reason they weren't dramatic is we had one day in the middle where they were all up between 20 and 30%. That day notwithstanding, this would have been a nightmare. July, which is now over, here's the final July. Red. Bitcoin was up in July. Bitcoin had a good July, up 7%. All of the stocks were down. Now, some of these, no big deal. CleanSpark down 5%, HUT down 7%, even CIFR down 9%. Not the end of the world. Then you jump to Marathon down 19, Core Scientific down 19, IREN down 20, Hive 22, Riot 26, TeraWolf down 29%, Keel, BitDR down, or Bitfarms, formerly Bitfarms, down 31%, BitDR down 34%. BitDR and ABTC are basically the two straight up Bitcoin mining. ABTC is a pure play. BitDR is very nearly a pure play. Bitcoin was up 7% in July, and these stocks were down 34% and 46%. They got wrecked. Which leads to year to date. So we still have, here's our only good news. We still have a bunch of green year to date. HUT is running away with this thing. HUT is up 134% year to date. In a distant second place, Keel is up 69%, Riot 59%, TeraWolf 54%, CIFR 51%. I mean, you can still consider this a very good year, right? It's hard to, be crying in your soup about being up 51% on the year. Core Scientific up 42%, CleanSpark 36%. Even those are very good numbers. They're not what I had hoped they would be or thought they were going to be at this point. Marathon up 26%. Hive's only up 10%. And here's where it gets disappointing. IREN is down 3%. This is not only my biggest position, so you can say, understand I'm coming at it from that angle, but as objectively as I'm able to be, understanding it's my largest position, I think IREN's year has been spectacular. So I'm very surprised to see it is one of the big lagging stocks on this list. I do think a lot of this had to do with the fact that if we go back and look, this was situational awareness, fourth largest holding. I got to believe that played a part in what went on here, but a lot of these were big holdings. Right, but see Riot at 7. Riot was number 7, but only 3.7%. IREN was 10% of this portfolio. So that's a part of the reason. It's not the only reason. IREN's gotten beaten down. IREN's getting shorted, etc. I have a high level of conviction. I'm buying. I'm not adding any more stock. It's already my biggest position. But I will buy midterm, not leaps, but midterm calls. I will put a few dollars into that because I do think the next move is up. This is lagging behind in a way that makes no sense that I can make sense out of. But the market can be irrational, so I'm not going crazy with it. BitDR down 6%. Bitcoin's down 28% this year. Not having a good year, but in a distant last place, ABTC is down 78%. And the one thing that I will say about that is if you go take a look, for whatever it's worth, ABTC's market cap is $673 million. Most of the companies we're dealing with are $2 billion, $3 billion, $5 billion, $6 billion, $10 billion. Some of the new ones we added are $20 billion. So this is the smallest market cap out of all of them. Is it properly priced? It's down somewhere between 97 and 98% right now from its highs from 2025. So I don't know. Is this, being down 98%, having such a small market cap does leave a lot of room mathematically for a big upside, but you got to do your due diligence on this stock. If they're not going to succeed, then they're not going to succeed. So none of that may matter. Or it may be a swing trade where you think it doesn't matter even if they're not going to succeed. They're so far beaten down, they're going to get some momentum. Those are the things you need to decide for yourself what makes sense for your portfolio at this time. So that's what happened this week. That's pretty much everything that I got. I want to thank everybody for joining us. You can still smash the like button on the way out if you enjoyed this content. Leave your thoughts in the chat or leave a comment on the actual live stream itself. And I'll try and check those out. Let me know if you like these longer form streams that we're doing. Let me know if you like the content or if there's other things you want to talk about or if there's things we talked about that you didn't like. For those of you who made it all the way to the end, please let us know what you think. And thank you, everybody. Let's see. George is saying, if someone offers me $100 million for 10%, I'm taking it. FYI. I'm with you, George. I mean, it worked out for Zuckerberg. He's made almost got carried away. Billions and billions of dollars, right? He's got, I think, more than $100 billion. But given the risk reward, I would have taken that $100 million all day long. That's just me. So thank you, Sour Melon Gaming. Thank you, George. Thank you, everybody, for joining us. I hope you guys have a fantastic weekend. Go Bitcoin.